Today, Paul and I discuss wealth building and the fact that it is not linear. There's no overnight success with really anything in life. But there are two key ingredients that will ensure success with wealth building. And it's the same for pretty much every area of life and certainly for infinite banking. Enjoy the episode. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right, Paul. How you doing, man? Man, the sides, the barber got those really good, I got to say.
Yeah, look at that. Super
Man.
motivated haircut.
What are you?
I actually gave him a business card, too.
Nice. You definitely don't look like you're almost about to retire. It actually looks like you still care.
Yeah. Well, I don't.
Wow. Yeah. Well, you're
But
fooling
somehow
me.
I'm still able to effectively do my job. Again, just because I work with really good people. And I figure the more work I do, it's less for them after I leave. So that's what keeps me going.
Yep. Yeah, you're making a difference. Even though as soon as you leave, things will just continue.
The Army will go rolling along, as it were.
Yeah, we don't need you to sing it. Well, nice, man. Kids back in school?
Kids are back in school. They are. Sports are, baseball. Anthony had his first game yesterday, and so that's all ongoing. And
First baseball, fall ball?
fall ball, yeah.
Yeah, we had our first football game last night
Nice.
for Blake. So, yeah, we got smoked. Boys didn't play very good. But, well, we got another one on Saturday, so a quick turnaround.
Yeah.
Yeah. But it's fun. Yeah, kids are back in school. I get to work out in my home office again, except it's the afternoon now. So I come to this office because it's too loud at home right now.
Right.
But yeah, that's nice. Kind of nice to get back in this routine.
Yeah.
So you had an interesting conversation leaving work today, and this is kind of like a good IBC in action segment where you can talk about, well, why don't you just retell it here?
Yeah, so this is very practical. And I want to say that out of all of our YouTube videos, this might be the most watched. But it was the subject of repaying a debt, in this case, subsidized federal college, student loans. And this is a coworker of mine. And I told him, I'm going to talk about this today. Because I was like, I've got the solution for you. And he's like, oh, let me hear it, sir. Well, it's quite simple. And if you want to incorporate the Dave Ramsey snowball, because it'll make you feel better, that's fine too. But what I proposed to him was like, listen, he has the cash to pay off this debt, sitting in a high yield savings account, earning 4 or 5%. Great. He had a windfall from selling a house a couple years ago. Wonderful. So what I proposed to him was like, hey, we can create a policy where you can fund the policy with the existing money that you have, and then a couple weeks later, like literally a couple weeks later, take a policy loan, repay the student loans, and now you're in complete control over the repayment of what was student loan debt. You don't have to make payments every month if you don't want to. If you have a bad month, whatever happens, right? Things happen. He's like, well, you didn't tell me that before. Like, you can do that with these life insurance policies. I said, yes, absolutely. I was like, well, you haven't read the book and you haven't done any of the work, and you're deep into that fantasy football league, though, aren't you?
Yeah.
He
Right.
knows more about that than I'll ever know. So I said, yes, it's very possible. We've done this with a number of clients and it doesn't matter if it's student loans or cars or mortgages or whatever credit card debt, doesn't matter. It can be done. And the difference in doing this, and I said at the end of this process, you will still have all of your capital.
Yep.
If
It
you
will have
just
been-
pay off the loan, either over time or all at once right now, by just taking the money from your savings account and paying off the student loans, you have lost the earning potential on that money forever.
Forever gone. Yeah.
So I think I'm making a slow dent in that thick head of his. He's a great dude. Smart
Yeah.
guy.
You know,
But again, I'll say this: he has to put in the work.
you got to put in the work to learn it, to understand it, because yeah, nobody can spoon feed you the exact solution to every financial issue or scenario you have in your life. But you and I often talk about why are you paying the bank back faster than they're requiring you to? So the question may come up, well, why would I pay that student loan off if they're not making me? Um, and sometimes the idea of paying those loans off faster than you need to kind of hurts because, well, I could do that, but then I don't have this money anymore, ever. But
Right.
when you reframe it and start rethinking your thinking, and oh, this money's going into a policy first, I'm going to take a loan against it, and I'm going to wipe that debt out completely. Now it becomes almost a game to see how quickly you can repay that loan to yourself. That's a lot
Right.
of fun. It's
It is.
fun to give money back to the insurance company faster than they require it, which is never, but you give it back faster than they require it because you know when you give it back it's going to be available for you again. It becomes a whole lot of fun, and you can gamify this loan repayment process with insurance companies, whereas paying a bank loan, a third party loan, you pay that off quick, great, you don't have the debt but you don't have the money anymore and you can't get it back either.
Yeah, he laughed at the end, and I was like, I was getting kind of animated and excited as I do when I'm talking about IBC, and I was like, you take those two people, one did it the Dave Ramsey way and just whatever, and you did it the infinite banking Nelson Nash way. Guess mathematically, financially, however way you want to put it, who is better off at the end of that? The IBC guy. Every single time. It doesn't matter who says what or out there in the wide world, the person practicing IBC and putting that process in a policy of dividend paying whole life in between the thing he was going to do anyway and what he's
Mm-hmm.
doing right now, that IBC person will be better off. And I'm sorry. I'm sorry that it's a whole life policy. Oh, it's so boring and it's guaranteed and it's not taxed. Oh my gosh. It's just a terrible place to put money, right? So
It's
anyway,
old, traditional. Yeah.
yeah,
Yeah.
just terrible. So anyway, I'm
But
making a
that's
dent
cool.
though.
I mean, what you did was you put it in a way that it applied to his situation directly,
Exact numbers.
and
We
he
used
finally was able to see it. Because some people, you can't, they don't, if they haven't done the work to read the book, educate themselves a little bit to start thinking like that, they're never going to see it unless somebody lays it out like that, like you did.
Yeah, and I think that's important to understand. People catch the infinite banking concept in different ways. I read the case for IBC and becoming your own banker, and knew in the middle of the case for IBC that this was this was the way.
Yeah.
And but some people are more numbers oriented, and I always said this, and I'll continue. The numbers don't matter. It's and people have all this software that does all these things, and that's fine. We have friends that do that stuff, and that's mildly important
Yeah. Right.
to the idea of becoming your own banker at the you and me level. It's mildly important.
Yeah, exactly.
So
So that's great, man. I had a conversation with somebody kind of along the same lines just this afternoon, a current client who wants to open another policy, and he's got a lot of cash just sitting there, and now there's this opportunity available. He's like, well, I could put all this cash to this opportunity because I want to get involved in it, and it's one that I actually told him about and I'm going to do too. And if he doesn't do it, because it may take 6 weeks to get a policy in force, get the premium paid, and have access to the cash value to run that money through there, it may take 6 weeks. Well, that opportunity may only last for the next 1 month. So now he's at the position where, if he wants to partake in that, he's got to do it with cash in the bank instead of money that's ran through his policy first.
right,
Unfortunately, because he didn't think ahead quick enough. And that happened to me a year and a half ago when I put money into something I hadn't planned, didn't have anywhere to put this excess capital. So it just sat there
yeah,
collecting dust, the proverbial dust. And I got anxious and I put it somewhere, and um, haven't seen it since.
right,
Yeah.
yeah. I think let me plug some convertible term strategy. I mean, why not, right? And I think this is a lesson for folks. Like, if you want the ability to quickly fund a new policy, you must have convertible term sitting on the sidelines waiting to be converted. Doesn't
How
have to be 10
quickly can
million or
that
5
be?
million,
How quickly can that be converted?
days.
Okay.
So if you say, hey, Paul, I want to convert $500,000 of this convertible term death benefit into a new policy that I can practice IBC with, I say, hey, let's get on a call. We design a policy. Yep, that looks good, Paul. Great. I send in a revised illustration. We sign some other papers, some term conversion paperwork. It's paper only. We wet sign it and stuff. Send it in, and that week, at the end of the week, I'll have a policy either in my mailbox or I'll have it the following Monday or Tuesday.
How cool is that? Man,
It's
just
very quick.
teed up, ready to go.
Yep, it's
Yeah.
very quick. It'll take longer for it to get mailed from Ohio or wherever it's coming from.
Yeah, right. So
Massachusetts,
that's
Ohio.
very quick. Let's talk about something that's not so quick, and that's building wealth in the first place. It's it's not a it's not an overnight process, is it? I think in this world
No.
of instant gratification, especially a lot of the younger generation types
Yeah.
expect for their wealth to grow a lot faster than our parents expected it to grow, or our grandparents expected it to grow. Our grandparents didn't expect it to grow overnight. They expected it to take decades to build.
Yeah.
So, this really goes back to, I mean, what infinite banking is all about. It's a long range thinking. It's you got to be in it for your life. It's generational. I looked up something that was interesting. I just did some Googling on Warren Buffett. Of course, everybody knows him, one of the richest men in the world. At one point, I think was the richest man in the world. But currently worth, at the time of this recording, according to some article I read, about $150 billion.
Oh, is that all?
That's all. And guess how much he was worth when he was 50? Less than a billion. Less than a
Less
billion.
than a billion.
He didn't hit $1 billion, according to this article, until he was 56. So that means like 99.5% of his net worth has come since age 56.
Right.
And he'd been at it quite a long time by age 56.
Doesn't sound like he retired.
No, the guy's 93 and still going strong, right? He's evolved into that philanthropic stage, which seems to be the progression of first you build, then you conserve, then you give it away. You start discovering another purpose other than just making money,
Right.
impacting people. So I just thought that was really interesting that over 99% of his wealth has come after he was 50. And we got so many people you see all this stuff on TikTok, Instagram, these young 30-year-olds or 25-year-olds driving Bugattis and flashing $100 bills. And people think, well, that should be me. Why isn't that me? The fact is, most people don't hit that until their 50s.
Those are anomalies.
Yeah. Or liars.
Or liars, but they're so rare that it's not, like Sam Bankman-Fried there of the FTX, that was all baloney. That whole company was baloney, right? Like, and he was being touted on Forbes or wherever on Bloomberg, as this like boy genius, right? The next, what do they call him? The next Rockefeller or Buffett or something. It was all baloney.
Yeah.
Anyway, but no, those are anomalies, or like you said, or liars. There's some of these people that have created wealth on YouTube or influencing or doing whatever they're doing, but that's most of us are not going to do that. We're going to be using time and consistency, right, to build wealth.
Yeah. That's really the two things it takes. Time.
Did you write that?
Can't-
Oh yeah, it's in our notes.
Yeah,
That
you can't
equals
do it.
success.
Look at
Turns
that.
out.
Time plus consistency equals success. I think that goes with anything, with building a business, building your body, building relationships. You got to, you can't speed up time.
No.
All you can do is give it the time it requires and be consistent about whatever you're doing. And that's one of the best things about infinite banking. And the way we put this process into place is it's consistent. You do the same amount every month. Ideally, as your income goes up, you're going to do more. So maybe you keep the same percentage of your income going, and adjust that as your income increases over time.
Yep.
But as long as you're consistent, you're going to win.
That's right. Someone asked me and Tammy the other day, friends of ours, how we had accumulated what we've accumulated. Given that we all had similar incomes and seemingly similar lifestyles and stuff. And I think, I was pulled aside in flight school by a retired warrant officer who said, let me link you up with my guy. And I was like, okay, right. And we've talked about this, but I knew nothing about whatever, financial world. But I started doing something. And then I had another warrant officer, consequently, a couple of years later at my first operational assignment saying, hey, you should be maxing out your TSP or putting as much as you can in there. Hey, that was good advice, right? It wasn't, I could have spent that on soju and, fried potatoes out in the Ville at midnight.
Yeah.
As I was coming back through the gate or whatever. And I probably did some of that before midnight, of course. But I started doing something. And like you just said, as I got those pay raises, and then every 2 years got pay raises, got promoted, whatever made more money, the percentage of what I was socking away I was able to increase that, right? So eventually I was putting 18 or 19 or 20% of my base pay into the thrift savings plan, which had been paid in premium, obviously, but there it is.
Yeah.
And that's why it was time. But now 18 years have gone by since that warrant officer told me that, right? 2005, I started the TSP. We're 19 years later. Haven't put any money in a few years, but you get the point. There was time, there was consistency, and I paid what the term was: pay yourself first, and I embraced that, and so did my wife, and that's the answer. We didn't do anything special.
Yeah. And you talked about pay yourself first. It's really unfortunate how we're so brainwashed to prioritize payments to anybody else but ourselves first.
Unless you're Robert Kiyosaki.
Yeah. Right. So if you haven't read any of his stuff, definitely do it.
Yeah.
But you're going to prioritize that bank payment, that mortgage payment, that car payment, that personal loan, that line of credit.
Right.
Yet you don't prioritize paying yourself. So at the end of the day, you're left with nothing. You're the one that put in the work, all that hard work, and what do you have to show for it? I don't know if this is kind of off topic a little bit, but we talked about something before we hit record that I think is worth talking about here. When you talk to people who are putting money in their 401ks, which is fine, but people who max out 401ks and then they hate the idea of life insurance because, or even infinite banking, because I don't have access to everything I put in. Look, I put in $10,000. I only have $7,000 available right away. So this is a question I would pose, and anybody listening who's still doing this, and that's maybe their thought process, or if you're fully bought into IBC, you're already a client, or you've got policies of your own, or you're becoming a client, you have other people in your life who, if you bring this up, they're going to say, well, that's stupid. I put more money into my 401k and I get a bigger return. I like to maybe pose this question. So if I ask you how much access to your capital do you have year one in your policy? What's the percentage, Paul? I mean, what's the range there?
Let's say 50 to 60%.
Okay. So there, you got 50 to 60% access to the capital that you paid in via premium. How about look at year 10? Say you're 30 years old or 30. Yeah, say you're 30. Look at year 20 in your 401k. How much access to capital do you have at year 20?
Zero.
Zero. So
Right.
who's really ahead at that point? Somebody
And
who's got
one
access to their
caveat-
capital or not?
Right. One caveat: not all custodians allow a 401k loan. Okay, we experienced that with Troy Small Trucking, right? When we jumpstarted that trucking company out in Utah. He could have jumpstarted himself, but his custodian for his 401k, of which he had plenty of capital in, did not allow him to access any of it. Zero loan provision. So those of us in the military, we can, borrow up to 50,000 or half our account balance, but
Yeah.
that's not always the case out there in the wide world. So don't compare your experience to everybody else's. But yeah, you have zero access, and then you have
Zero.
no control over the repayment schedule either. It's
Right.
every month, and I know
Yeah.
this. I have 2 TSP loans out still from 2020 that we're
Yeah.
slowly paying
If you
back.
do get access to them. But
Right.
what you said is a great point where, Congress defined the rules of the 401k. And, the IRS further created regulations and narrowed it down. And then it comes down to now the custodian gets to add their own restrictions to it.
Right.
So,
Well, they're out there playing with your capital, right? So
yeah, they don't want to give it back, man. They're leveraging that for their own good.
no doubt.
So, yeah, I don't know. I thought that was interesting. I don't know if that's off topic. We can veer back on the road now.
No, I don't think so. And for those of you that are, friends with me on Facebook, 8 hours ago, I posted something similar to that about, financial headwind and what you're facing, but you don't realize it and why you can't get ahead. And I encourage you to listen to this podcast, encourage you to go read Nelson's book and other books. I can give you a whole list, and Nelson's got a whole list of books in the back of his book, Becoming Your Own Banker.
Yeah.
Again, if you know what the problem is, you'll know what to do. But you raise a great point, and it's at this point, knowing what we know, it becomes annoying. Even though I don't advertise my frustration, but it's frustrating. You've been blindly handing $12,000 a year over for the last decade, and now you're thinking, why would I stop doing that and pay the same in premium? Where, are you getting some magical thing that I don't know about in your 401k? No. You're just delaying paying taxes on a larger amount of money, and tax rates are going to go up because they're low right now. So it doesn't make sense in this environment to put money in a 401k. And then
Yeah.
I'm going off on a tangent, but as a military person who's retiring with a 50% plus pension after 22 plus years, it made zero sense for me to put money in there. Zero. Makes
Right.
no sense.
Do you really need the tax benefits today?
No. I
Being
need
in the military?
No.
Heck no.
no.
Right.
No.
Where roughly half of your income's not taxed anyway.
A big chunk of it is. Our BH here is, tremendous, and it needs to be. But yeah, it's not taxed.
Yeah. Not taxed. But as soon as you exit that world and you go to corporate America or wherever you're going to proceed from the military, man, you better get a very large pay jump to make up for the taxes.
Yeah, that's right. You really got to gross down your pay, folks. So again, I'm speaking to our military brothers and sisters. You need to really consider that. After you leave, yeah, a lot of you want to just stay at home and be a mom or be a dad or whatever you're going to go do. That's fine. But you need to understand that you need to gross down because your pension's taxed, right? If you get some disability, that won't be, but your pension is taxed.
Yeah.
So you're already cutting your income by basically 2/3 when you leave the military. So now, what I'm saying is, I guess, the math doesn't add up. The lifestyle is not going to be the same unless you make that other person that you live with. All right, you got to go out there and continue to crush it. You need to crush it more too, like way more.
Yeah. Yeah. Or unless you're one of those old crusty sergeants who, his family's already left him and he's just going to tour the country on a motorcycle. He could probably live off that pension.
One of my friends has a guy that he served with in the Marine Corps who is in the real estate game and he's a former, I think, staff sergeant or sergeant E5 in the Marine Corps, and is absolutely crushing it.
Doing what?
Like real estate.
Oh, okay. Nice.
Like nationwide, created, has this niche and just, wow, like is killing it, right? And was, former infantryman in the Marine Corps, I think is what he was. So, we had this conversation today at work about getting a degree and the utility of it and all this stuff. And I was like, I don't know. A lot of people I know, one of the most successful people I know in this business that you and I are in, does not have a degree.
Really?
Yes. You know him too. You're going to see him in a couple weeks.
Yeah. Yeah. I was talking to a guy today, a prospect who started working for his dad at 15 years old in it's a certain niche insurance business in the health industry, if I remember correctly. But then he started doing it. He didn't go to college. He just started doing that job and is doing very well for himself. He didn't have any student debt. Started making money day one, and there's plenty of things you can do without that degree. So again, we're kind of getting onto a different topic. One of our rants.
It's a rant.
The value of a college degree.
But it is valuable to say that my path and your path, linked us up and put us where we are now, and that's just sheer blind luck, right? It wasn't the fact that we went to college. It's just
wrong spot, wrong place at the wrong time.
Wrong place.
Really.
Yeah. I mean,
ended up getting deployed.
Right.
Yeah.
So it's fortuitous. That means lucky.
Thank you, Paul.
What movie is that from? That's from Tombstone, folks, by the way.
So I'm going to go off on another tangent here. I was watching a Saturday morning. I like to wake up, have coffee, and watch a documentary. If it's quiet enough in the house and I can get alone. So I'm watching this new one on Netflix about Wyatt Earp.
Yeah.
And it's narrated by Ed Harris. And it's like the real story of Wyatt Earp. So they say. So I watched the first episode and I came up and I told Hannah about it. And she didn't know who Wyatt Earp was. And then I told
I almost said
our
something
oldest,
totally bad. Not about Hannah, but in general.
And then
Tammy doesn't know anything either.
And our oldest son didn't know who Wyatt Earp was. I'm like, are you kidding me? Have you ever heard of Tombstone? Like the place?
You ever heard of Kurt Russell?
Kurt Russell? Doc? I was like, what about Doc Holliday? Who's that? Oh my gosh, we got to go watch Tombstone now.
So it seems like if we form a trivia team, it should be just like probably you and me.
I'm pretty good at trivia. I don't know if that's a real good thing because that usually means you have a bunch of knowledge that's kind of useless.
I don't know.
Maybe I just remember. I think I have an affinity for remembering pop culture for some reason. A lot better than anything else. You're a history major, so you must be good at remembering facts and numbers and dates and places and all that.
Yeah. I still remember people's SAT scores from high school.
I still remember.
They don't remember them, so they have to ask me.
Yeah, that's weird.
I don't know why.
Yeah.
Anyway, we went way off topic there, but we talked a little bit about network, and your network is your net worth. I think that's important to realize. I posted about that today on Facebook as well. Put yourself out there and let people know what you're doing. Anyway, all right, where are we?
So I would just say, to kind of wrap this up and put a bow on it, it takes time. But when you look at, if you were to graph out a properly designed whole life insurance policy for purposes of infinite banking concept, it starts a bit like a hockey stick, just gradual growth, and then all of a sudden it's going to veer up, a dramatic increase year over year, kind of like Warren Buffett's net worth.
So it starts off on the business end of the hockey stick.
Yeah, I guess you're from the East Coast. I'm from Minnesota, but I'm not a hockey guy. So yes, the business end of the hockey stick, and then it becomes the actual handle. What do you call it? What? Just the stick?
I didn't play hockey. I was not one of those rich kids.
Yeah, you don't have to be rich.
That's
here
what my mom
hockey.
said. That's a sport for rich people.
You don't have to be rich here. You just got to be a dumb parent who's willing to put up with it.
God bless them.
Who you don't know what you're getting into.
But yeah, getting back to how the policy, the actual physical tool that we use to implement and practice the infinite banking concept. Yes, I always use the analogy. It's like making a snowball at the top of a mountain. It's very tiny and small. It's like the cartoon. They roll it down the hill and it gets massive and it's going very fast. And of course, it'll be the most efficient and the most powerful on the day you graduate, the day you die.
Yep.
But it doesn't take that long, right? It
No.
doesn't. And it's not something as a guy who practices the infinite banking concept in my life. It's not something I even think about. Oh, when does this policy break even? I've never once thought about that. It's mildly interesting to me because it pales in, when I compare it to the overall of controlling the banking function in my personal life, in meeting my family's needs, eventually meeting other people's needs. That is the essence of it. I could care less about the little details of, oh, it broke even in year 5, not year 4. Whoop-de. I said this last podcast. Whoop-de-doo. Like, who
Yeah.
cares?
Yeah. It's about when
Mildly
can I
important.
start controlling more of my capital? Well,
Right.
day one.
I think that's majoring in the minors, maybe some people say. Like, it's a detail that's just, to me, silly.
Yep. For, focusing on the trees instead of the forest, getting
Right.
down in the weeds. We could go on with analogies if you want to play that game.
Right.
Small rocks, big rocks. Focus on the big rocks, not the small pebbles. So, yeah, no, I mean, it's going to take time, but you're right. It doesn't take that much time, really. And
I mean,
even while it's taking that time, you're using that capital because you're controlling it. You're putting it to work somewhere else if you
no
choose
question. Right. And I think this spring will be my, let's see, let me do some math here. 19,
to. Yeah, it'll be 6 years.
Yeah, it'll be the
Because
sixth year, seventh premium,
seventh
because you have the
premium.
initial premium, right?
Yep.
Seventh premium on those policies that you sold me when I
Oh, cool.
became Dave's first client. I was
You
actually
sold-
one
you sold
third of his
yourself.
first. Yeah,
Yeah.
that's true. Now well, that's right. This is not the sales business. Dave and I are probably the worst salesmen on earth.
Yeah,
Again,
I sold. I had 10 policies written the first year I was in business. The second year,
40% were mine,
40% were you. The second year, I had 12,
and 3 of those were my referrals.
and one may have been on myself.
Right.
Yeah. So but just like my business, probably same with you. It started like this. It was very gradual, and then at one point, it just starts. It really shoots up. That's just the way things work when you're consistent and you give it time. Period.
That's right. And you've talked about that in your own experience about being consistent with like your 1 year's worth of LinkedIn posts every day for 365 days or whatever it was.
Right.
And that's what we try to do in this podcast, folks, is right. Just consistent messaging about the infinite banking concept, not trying to make it better than it is. But there's some interesting times that we're living in right now financially. And I think really over the next 6 months to a year and maybe even beyond. I mean, it's hard to tell. Can't predict the future. It's unknown. But very interesting times with all the money printing and election turmoil and stuff across the world and what's going on in Japan. And there's just a lot of things going on. And it's nice to know that I have a pool of capital that I can rely on and I can get to at the snap of a finger in 30 seconds on an online portal. So,
Yep. And when those opportunities come along, which they always do, in good times and bad, I'll be ready to capitalize on them.
yep, that's right.
Yep. And so will our clients. So, speaking of that, if you are interested in having a call or a talk with me or Paul, go ahead and check out the wealthwarehousepodcast.com. We'll put that in the show notes along with our personal Calendly links are in the show notes. Go ahead and feel free to schedule time with Paul since he's got a lot more time on his hands these days since he hardly works. He's not working hard. He's hardly working. So find that link, schedule time with him. But check out the website. There's a couple of resources on there for a little bit more information, but go ahead and check that out and schedule some time with us. Let's talk.
Yeah, and I'll just add on to that, Dave, that like our process is pretty simple. It's read that book. If you're on YouTube watching, I'm pointing to Becoming Your Own Banker. It's take a little course and then schedule some time.
Schedule
Like
time.
It's very simple, and you'll want to do this. And of course, listen to the podcast. Right, you're going to glean. If you get one golden nugget per episode, I think it's worth it. That's how I learned back in the day, listening to James and Ryan and other people. I learned so much. So anyway,
Yeah. All right. Perfect. Well, hey, have a great week, and we'll be back next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.